All right, welcome to today's webinar on the Snake River Vegetable Farm. My name is Drew Lipke and I'm the Director of Investments on the farm team here at Acre Trader. I'm joined by my colleague Rob Moore, our Director of Farm Operations. We're excited to bring this irrigated farm in the highly competitive Treasure Valley region of western Idaho and eastern Oregon to the platform. We want to be mindful of everyone's time today, so we're going to try to keep this webinar under 15 minutes. We encourage anyone with questions to please reach out to our team. So before we begin, we do have a few slides with disclosures that our legal team has written for your review. We're going to show each of these, allow enough time for review. Really want to highlight that the full PPM is available for download in the documents section of the website. In addition, there is a complete financial model that is available for download. Again, more risk factors and disclosures here. I do want to clarify that this is an investment and all investments involve risk, which are outlined on the slide. And more specific risks outlined here. This specific offering does have a planned improvement associated with it. There are always risks associated with that. There's always risks associated with water when investing in farmland and agriculture. All of these risks and mitigation strategies can be viewed in the offering documents on the platform and the PPM. So before we dive into the specifics of the farm, we want to highlight why we believe farmland is such a compelling asset class. You will see many of these factors tied directly into the Snake River Vegetable Farm. First is the finite supply of farmland, and in particular investment grade farmland. This is a key differentiating factor for our asset class. While capital can increase the supply of multifamily housing or data centers or warehouses or commercial real estate, no amount of capital can add back farmland that has been developed. This Treasure Valley farm is 50 miles from Boise, Idaho, and in the Treasure Valley, it's really a prime example of this development trend. In addition, water is a limiting factor for growing high-value crops, such as the onions, potatoes, and sugar beets that are grown on this farm, and this puts a further cap on supply. Meanwhile, demand for the food, fuel, and fiber that is produced by America's farmland only continues to increase from both global population growth and a growing middle class. And it's really this dynamic that has led to farmland historically providing not only capital preservation, but also has clearly shown capital appreciation over time. And when you couple that capital appreciation with the rental income and the low risk of vacancy, it has historically driven very consistent returns for farmland. So this is such a simple point, but it's very important to stress. We lose over 4 acres of farmland every minute in this country. Again, many asset classes are more cyclical in that capital can increase supply or decrease supply and thus returns. Again, no amount of capital can add incremental farmland in a place like the Treasure Valley. There's just simply not the water resources to do so. So when you take an in-demand asset and you consistently shrink its supply, it creates a powerful return potential. This is the NC Reef Farmland Index dating back to 1990, which is as far back as it goes, compared to both the S&P 500 and to gold. On average, farmland as an asset class has generated a total return of 11%. Another key benefit to farmland is the diversification that it can provide. You can see these diversification benefits really exhibited here on this slide when you compare the correlation of farmland to other asset classes. And it's really this dynamic that can make farmland such a stabilizing asset for an investor's portfolio. So we have here another graph to show farmland returns throughout time. Geopolitical and economic uncertainty are two of the top questions that we get from investors today. The first point here is historically, farmland has proven to be a store of value in times of both economic and geopolitical uncertainty. You can see that during the shaded out times of recessionary pressures, we still generate a positive return in farmland. And in fact, over the time frame of this index, farmland has never had a down year. So when you combine our access to unique and proprietary data with the expertise of the members of our farm team and our data science team, it creates really unique access to farmland for investors. By simple nature of our business as a very public and farmer-focused organization, we review thousands of opportunities every single year. This consistent repetition overlaid with the data and the experience of our team creates really a unique sourcing mechanism for us, and I think you'll see that in this offering today. So here you can see everything that we funded to date. We've successfully funded over 140 farmland investments and approximately $350 million in equity across 18 states and Australia. This farm today will be managed by our in-house team at AcreTrader Management. AcreTrader Management has now had 10 farms go full cycle, and all 10 farms have outperformed their initial target returns. So now I'm going to turn it over to Rob, who worked on the underwrite for this farm along with Kyle Knight on our farm team.
Yeah, thanks, Drew. So my name is Rob Moore. I'm the Director of Farm Operations here at AcreTrader, and I'll be walking through the asset details for the Snake River Vegetable Farm. As Drew mentioned earlier, please note that the PPM is available with full details on this offering in the documents section of the offering page. In addition, there is a full financial model that you can download directly in Excel form. So there are several highlights we're going to focus on that, while specific to this farm, are also representative of the larger thesis around investing in farmland that Drew covered. As with all real estate investing, location is paramount. So I'm going to start by zooming out and going through our excitement around the Treasure Valley before covering some of the intrinsic qualities of the farm itself. Now, the vast majority of high-value crop production in the Pacific Northwest centers around the Snake, Columbia, and Willamette rivers. In the case of the Snake River in Idaho and eastern Oregon, we have a semi-arid climate. That means there's very little rainfall, long sunny days, silty and sandy loam soils, and abundant water. What this provides is control and optionality. Now, lighter soils allow for consistent growth of high-value tubers. Tubers are plants that grow underground. Basically, the potato or onion or sugar beet is growing underground. This lack of rain, with lots of sunshine, when paired with abundant and reliable water, gives a farmer unparalleled control over those growing conditions. It's worth noting here that vacancy on high-quality farm ground is effectively zero in this region. Operators are looking for additional acreage because the fixed cost of equipment and staff only allow for scale by maximizing your managed acreage. This has the potential to drive significant tenant density and considerably higher rents for irrigated acreage capable of growing these high dollar crops. Now, just anecdotally, we've already received several rent bids for this property from local operators, even though we haven't completed the real estate close. All of this competition for ground is driven by the increasing loss of farmable ground that Drew reviewed earlier. In the Treasure Valley alone, over 131,000 acres have been taken out of production in the past 25 years. Now, this is in large part to development of the Boise Metro District. The Boise Metro area has increased its population by 25% in just the past decade. This urban growth, when it occurs in tandem with the increased demand for food, fuel, and fiber, it sort of underlies the thesis for investing in our asset class, and particularly this specific region. We have to feed, clothe, and transport more people, and we're doing so with less and less land. In areas like the Treasure Valley, this is particularly acute because farmland and irrigated farmland in particular can't expand too far away from the water source of the Snake River. There are pumping costs as well as management costs associated with that water, and you lose water as you move it in above ground canals. So when combined with this effectively perfect climate for production of potatoes, onions, and sugar beets, along with light soils and water, you just can't really go grow these crops somewhere else. Now, digging into the underlying asset itself, we're looking at over 470 planted and irrigated acres capable of growing the most high-demand crops in the Treasure Valley. Again, there's a little over $300,000 being raised on top of the purchase price. This is to transition furrow irrigated ground into center pivot irrigation. So the way to think about this is furrow irrigation is where water is pumped down a dirt canal that runs between crop rows. This is a less efficient use of that water compared to pivot irrigation, which is in effect a massive sprinkler system on wheels that the farmer can use with an immense amount of control over the timing and amount of irrigation. So transitioning acreage from furrow to under pivot has a couple of specific upsides. One is land values. So ultimately, pivot irrigated ground typically trades meaningfully higher than furrow irrigated ground. On top of that, rents tend to be substantially higher. For context, the initial rent bids we've received offer about 50% more for pivot irrigated ground than they do for furrow irrigated ground. Again, all of this comes back to the amount of control you have over growing that crop, specifically when you're growing a table vegetable, right? Like russet Burbank potatoes are grown in the Treasure Valley. You can go to the grocery store and find a russet Burbank potato. That potato doesn't have blemishes on it. It's not hacked in half. It doesn't have any rot spots on it. That is only possible in a very controlled outdoor growing environment. Having raised about $350 million in equity toward farmland over the past 5 years, we are ecstatic about the opportunity to bring this specific asset to the platform. Really encourage you, you have a lot of different options of places to go and ways to build out a diversified portfolio, and would really heavily encourage you as a consideration for Acre Trader and your portfolio to reach out to us directly. Pick up the phone and call us. We're still a small enough company where if you call us, you can speak directly to Drew or I, as well as any of our IR representatives. We tend to be very transparent and open, both about the specific asset as well as the asset class more generally, and are available anytime you need us. This farm will launch live for public investment next Wednesday at 1 p.m. Look forward to speaking with you between now and then.